Some questions perhaps about the selling prices for Fitbit hardware down more than some people expected. How much of that has to do with you trying to seed the user base for the services you've got coming?
That was definitely our strategy for Q1. We launched 3 products to address a broader segment of users and to hit a better price point. And that strategy worked. We grew our active users in the first quarter, and that's in advance of the launch of a premium health service that we plan on launching in the second half of this year.
How much marketing spend is that going to require, and what can you tell about your expectations on uptake for that? Is it exclusively people who already have active Fitbit hardware, or will it go beyond that?
Yeah, I think the great thing about our business is that we currently have over 26 million active users. That's a tremendous number of users to whom we can market this new service. So we do expect to attach a lot of our users to the service. And overall, I think it's indicative of the momentum that we're seeing across the business. As you mentioned, we beat on the top line. Our revenue grew 10% year over year, which is the first revenue growth we've seen in 3 years since 2016. And our smartwatch portfolio grew 117%. Our devices grew 36%. So overall, we're pretty happy with the momentum in the business.
James, I know huge growth. You just mentioned it, 117% in the smartwatches, but the fact that you also saw renewed growth in trackers, who's buying those, and were you surprised to see the uptick there?
Yeah, so trackers grew 17% year over year, and I think that just goes to show you how innovation and a more affordable price point can drive growth in a category that people were not excited about previously. But for us, I think the big surprise is that the tracker category still continues to resonate. There's a clear segment of users who prefer that form factor, and it's resonating incredibly well in the healthcare industry. Healthcare customers prefer the form factor, the lower price point, and that was a big reason why our healthcare business in Q1 grew 70% to about $30.5 million in revenue.
James, how do you avoid falling into a pit of marketing spend on services? I mean, you can go down the line of traditional subscription services providers, and the amount that they spend on advertising, which certainly TV appreciates, though, can be staggering. So is there some sort of a recommendation or freemium model that you plan, or should investors buckle themselves in for a lot of marketing spend as the service launches?
Yeah, so I think that's a typical scenario, but I think the great thing about Fitbit is that, again, we have an incredible user base of users, over 26 million active users. That's grown nearly every quarter. So that's going to be a great customer base against which we can market the premium service.
Where are the bigger opportunities? Here in the U.S., given the fact that healthcare here is so ripe for disruption and for this new technology to come in and sort of shake things up, or is it international?
Yeah, if you look at the dynamics of our healthcare business, a lot of the growth was actually powered by strong execution in the U.S. But I think one of the things that surprised us and is a growth opportunity is that healthcare, as we see it, it's a global opportunity. We're starting to see a lot of momentum in our international markets. So as we try to hit our 100 million revenue target for the full year, that growth is going to come both from the U.S. and international.
All right, James Park, after earnings, the stock at $5.12 a share. Thank you for joining us.
Great, thank you.